Good morning, good morning, good morning. Going into the 10 o'clock open on Wednesday, the 28th of October, 2015. Gonna do something we normally don't do is a morning video during the open. And I'll talk about, not really random stuff, but things I normally don't talk about or oftenly don't talk about. Let's go into the disclaimer. Investing and trading in the financial markets pose substantial risks where one can lose all or more than the initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Alright, if the thinkorswim kicks back the low memory error, please disregard it. Alright. Awesome. I got things going crazy. Alright. Let's go into suppose real quick. It's a 10 o'clock open and got a nice little push higher. Not going to go too much into the long term. You want to know where we're at, go to the past videos. But we're going to talk about where we're at right now. Alright, the most aggressive entry buyers are rocking this tape. Alright, so not sure what all these chart patterns are showing to the Twitter sphere or to any other blog. But we're going higher. And shorts that are trapped are what's going to fuel this rally to new highs. Alright, where are we at right now? The high of the 21st of October measured to the 23rd of October's candle, high to high. That gives you your support level, and that traded on the 27th. It's targeting the 84s. I believe yesterday I said it was the 83s. Forgive me, I drew it wrong or I was just confusing numbers. But it's targeting 84s. Alright, and that's the again, it's not to say that's the top. That's where the first target is at. That's where you reduce risk, you take profits. Alright, I already moved my stop up. Alright, I'm not taking losses, especially when you're getting into a high level, when you're buying top ranges. Alright, I brought 54s yesterday. Alright, I even nibbled halfway down. Oh, somebody who asked me, how do I, measure this, especially if it's in a bigger range, real quick. It's very off topic, but I just want to throw it in since we're here now. Again, another one, that's 3. Alright, what I pretty much do, it's an easy way to do it. You just measure the range real quick. It's a simple way to do it. You don't have to do any math in your head. You just draw a fib and you just take the 50. So you pretty much, you'll buy 54s, and then if it starts going lower, you're going to try to for 52s and less, and you're stopped out there. So it's just a quick way to keep hitting entries without having to do any math. Where I move my stop is pretty much from the low that traded support, and geez, that's 4 in a matter of a few minutes. I guess because I'm running all this other crap. Alright, from lows to highs, and now you have to take it off that candle. But where my stop is now was from lows to Tuesday's night highs. My stop is right on the 57s. Alright, so it's pretty much it's guaranteeing my I don't want to say guaranteed, but it's I'm locking in some profits. Alright, so just one thing to do for right now is nothing. Alright, you got minutes coming out. Whether that impacts the market or not remains to be seen. But support below down at 54. Next target 84s, and it leads on to, again, new highs, 2263. Right, so that's what pretty much what we're aiming for. And it's not going to happen in the day. I want to go to the Russell real quick. Well, as quickly as the computer lets me. Alright. The Russell, from highs to lows, has traded a short. But in the grand scheme of things, Russell has been running extensions as since off the lows, well off from 2009 lows. All right. From its breakout, the reason why it's running extensions, because from this breakout, this double top push up, it's never had a 50% retracement. All right. So yes, here was a halfway back, but since then there was never another pullback. It has blown through all targets and has went into extension. So from high of the 2011s to highs, I just want to show you where we're at. Alright, the Russell has traded support. Alright, this is why I said major support long ago was right around 1100, 1080s. Alright, 1084. Alright, it has traded support and held. Alright, next target on the Russell, 1395. However, Russell must get above 1200. Until then, it's pretty much trapped in a range. Alright, so best man wins. Alright, let's go to oil. Alright, I'm not sure if you remember this. Alright, oil support level. And that was measured from the August lows to October highs, which are going to be just about. So if you want the accurate numbers, you do it on your chart. But pretty much, yesterday, busted. Support busted. Where do we go from here? Lower. Not saying it's short now. However, the target on oil, on crude oil, 32.10. Going forward. Going forward, I would use this high, the October high, too low. Possible short entry, 46.76. I would not use extensions, as that's broken. Awesome. Love when it goes haywire, don't you? If I can get this drawn, thank you. Possibly here as a measured move. Alright, but before you throw out limit orders, I would wait to see how it acts around this level before you try shorting 45s. Otherwise, a better opportunity above at 46. And you throw a stop up above 47.75. Again, 45.29. I would let price react around this area. Alright, before trying to, take a short here. But just know this extension, or excuse me, this measured move is wrong above 45.93. Maybe if I drew it not perfectly, which it looks like I did, so it may be adjusted. It's just about right. Alright, so just know where you're at. Alright. Next target, again, if that hits, is 41.29. If 46.76 trades, it'll be 40.60. If not, the bigger picture is down. $32.10. Bonds. Bonds is stuck pretty much in a range It's a long but stuck in a range temporarily. When that changes, okay, the October 2013 lows to the highs of 2015 gave it a pullback to the 147.10s. The target's 176.04. There is no short. So anybody expecting higher rates is going to have to wait a tad bit longer. There is no shorts. The shorts are broken. Right? However, there is no continuation from lows to highs. Those are broken. So, in my opinion, this is still range bound. Until there is one support that trades and goes to target and holds a pullback, it's going to expect range bound. When that changes, I don't know. You'll know when, but when, I don't know. Bonds, let's go to gold, because it is trying to, I know it did break a short this morning. Yeah, it broke the short from the October highs to October lows. That short is broken, but in the grand scheme of things, it's still noise until it gets above 1220. I know that's a long ways away, and it can happen. Today's FOMC. Whether that provides an impact to gold, I don't know. But gold is quite interesting, only because it's still a huge pattern. It's pretty massive, right? Bigger picture, it's a short within a major long. All right, so next target, the next immediate target, if we cannot break above 1220, gold is heading lower, and it's saying 1018, and you're still within, again, this realm of major support. When that changes, 1220, above 1220. All right. Besides that, it's just consolidating. Somebody is buying gold at major support. With that said, let's go to the dollar. I lost count, but I'm probably in about 10 times already with that error message. The dollar. I nibbled on this morning. Again, and mind you, I was early. I was selling 96s. Yes, exactly, 96s. And it wasn't 96.65. It was a little bit lower. I was measuring something else, and I guess I was creating my own story, and that story is not providing any solvency. But this should have been the right level to sell. I know it did go higher, but that's what this market likes to do. It likes to spank people right out of their position, and my stop is right with that. 97.64 is my stop. And then that's pretty much it. I believe there is no continuation. Actually, yeah, there's no continuation. Yeah, there's nothing that's saying it's going to start going down or up, for that matter. From the lows of, let's try to see if I can get you a continuation to the upside, which I don't remember seeing any, but let's just real quick check. Yeah, there is no continuation to the upside. Right now it's still a short, and it's actually in shorts, and it's in a massive short at the moment. Alright, the big picture, let's go to a monthly chart. From the highs of 121.29 to the lows of 71. Alright, this was a massive squeeze into a short, and there is targets well below sub 60. 59.19. That's huge. All right, it's not going to happen overnight. I'm not saying it's going to be a dollar crash, but the value of the dollar, if this does not change above 97.63 at minimum to try to challenge resistance, below anything below 102.10, the dollar is a short. Next immediate target down at 90 halves. Went over oil. Okay. Next two things I want to go into. I'm gonna keep it short with these. Oh, excuse me. I'm gonna go into these two, but I'm not gonna do any more than that. I'll probably do it in a future weekend video of other ideas, and these are with stocks. And I'm gonna start off with Google, and this goes back to a long-term, my own personal thesis as if I had a gun to my head and I had to invest in stocks, of which I keep it very small. My wife's portfolio is a lot larger than mine in stocks, because she believes in the market in her own ways, and with certain other things, that the things that she invests in is we have our own quarrels about it. But gun to my head, Google, Amazon. The only one that has been a fail as of recent, and the reason why I've been jumping back in, Twitter. I look at things that people use, not only use, but there is some kind of benefit, not to just themselves, but to the global economy. And Google has been a leader, providing innovative tools. Amazon, for the convenience of shopping. And my wife knows, I mean, she doesn't go to the stores for nothing. She hates lines. She hates going out. If it's not to walk the dogs or to enjoy the outside, to enjoy it, shopping, that's not something we do anymore. We do not go to the stores and shop. Again, Google, Amazon. There's not too much more that I'm really interested in. The 3D printers. Again, it's so seldom and few. It's not even. I don't even pay attention to it. I feel that a lot of these things, they don't move on people's opinions and the reality of what they are. Alright, so it's like I don't invest in an idea. I'm investing in what I feel is more common sense than anything. With all the nonsense that goes on between individual traded stocks, between these companies, it's to buy news and rumors, and when somebody does something within the books, and stocks overnight can go to zero. I know the indices won't go to zero overnight. It's gonna take a lot of calamity for indices to have an overnight haircut, opposed to a stock. And I just feel, in my opinion, it's just, stocks is not something, if I can't control it overnight, if I cannot control the risk, it's not something I want to partake in. This is why more I trade futures versus ETFs and stocks, right? I do have a very small basket. The majority of them are in ETFs or in bonds. But besides that, individually owned companies, no. And not at all. Alright. I don't even own any of Google. Google, the last time I had ownership in Google was between this area, 2012, 2013. Took profits and never went back in. Alright, so just to show you that I'm not going to say that I've been involved in Google since the lowest of the highs, no. But I do have an idea where they're going, though. With that said, stocks, if you're ever trying to measure with Fibonacci retracements, as far as measured moves, or trying to figure out where to take profits or get in, all right, you have to know that stocks, they're not to say that they're random. However, when they are respecting their fibs, it's a play, and you have to respect when they're playing in that immediate term, whether it's up or down. When it's in play, it goes. And more often than not, they don't respect traditional measurements. It's either they're running in extensions or they're just trading in measured moves. Google, for one, likes to trade and measure moves. right? Just picking a random leg, right? It does respect it and will go to target. From there, from a measured move, it will stop trading measured moves and you just blow into extensions, right? Google, from this high, from the 2007 high, when this double top slightly backed off, retested the breakout and just been a moonshot. All right, so measuring from these highs, from the 2012 highs, that gave you your support line, your anchor, excuse me. It gave you your high to high extension from every single leg up. And you better believe they respect it. From highs, excuse me, not that one. Oh no, stop doing that. From highs to highs. All right, then with this leg, I found this interesting. Google started trading in measured moves. So it's very, very random. And excuse me, it wasn't even that leg. Oh yeah, that high held and then it went here. And now it's at target. So Google, again, still hitting new highs and extensions up. When that changes, I would honestly use this anchor. Next target on Google, 742. Just as long. 698 doesn't trade. And again, I would not be very anal with fibs, especially in stocks or ETFs. They do have a tendency, and this is why I usually don't trade stocks this way. They do have a tendency to like break, get you out to blow through your stop and then continue on. It does happen, especially in after hours, so be careful with that. Twitter, let's go to Twitter, because they just reported yesterday, and a lot of people are getting frustrated with Twitter. And what are we trading at now? Cool, I'm up. I did make a tweet out there. I did get back involved with Twitter with the pullback last night into earnings. I'll get into that in a second. But I am long. I believe it's 27.80, something around there. Alright. Twitter. From the highs of 74.73 to the first leg down. This is where Twitter came into resistance a few months ago, the beginning of 2015. And I was not expecting, I was hoping that Twitter was along. I did have Twitter, I did buy Twitter long ago, and I held it through. I actually got out here, somewhere in this level. I had gotten out, stopped out, re-entered, and stopped. It was $50. Look back on the tweets, I forgot it long ago, but it was about $50, 5 cents, something around there. It broke, I was out. Didn't know what the news was, I got out, and it was the next day. Twitter just, I forgot it was a release of some kind of news early during the trading day, and Twitter just went to crap. All right. Again, Twitter resistance 5207, and it targeted, I think, $19. Again, that's like the 2,000th time that error message came up, and it targeted 19. All right, so whether it makes it to 19, I don't know. However, the extension on Twitter, whether you're measuring from this low or where I'm measuring from here, has broken. All right, it broke after the fact that after it traded its lows. So, with the pullback, that was the first spot to nibble on. 25s. To target 30.93. So it's still in shorts. And what I mean by that, the only thing that has broken, the only short that has broken, was the immediate downside risk. The extension broke. It's still in shorts, What I mean by that, from the 74, 73s, and this is actually now starting to piss me off, if anything. 74, 73s to lows. 21s. Alright, we're just going to get it in the ballpark. It's snapped to 2081, but it's supposed to be 2101. Alright, so this is resistance. 54. However, it's not to say that it can't trade back up into resistance. The reason why it can trade back up is because this extension broke. The downside, the immediate downside, the risk of it going down, no, it's more of a risk going up. And it's even more of a risk of it going up because buyers are buying pullbacks. They're buying pullbacks. So from the low of 2101 to the most recent high, I believe it's 30. Geez, I forgot it off the top of my head, but let's just zoom in to the high of 3187. Alright, I snapped it to 3191. I'm just going to leave it. It's a few pennies difference. This is your support. And I already started nibbling once. Only because I don't know if they're measuring from here up. This is the only reason why I started nibbling already. And it looks like buyers are holding it so far. So we'll know by the end of the day. Actually, not to say it wouldn't happen tomorrow, and Twitter is at the highs at the moment. These are your two reference points. All right, below 2720 can go a little bit down. All right, but pretty much I would not be holding this long below 25. I will. That's it. That's my give up point, because that takes away from this level. And it takes away from this side, and then that will be a loss. All right, and no, that's where my stop is at. That is not being moved up. You got to give it some kind of. You have to give it room to move. All right, if it's a long, it will go to target. The next immediate target on Twitter, and again, just mind you, these levels are not snapped perfectly. The next level is right around 34. 33.73 with the bigger fib at 34.47. All right, that is that. Trying to look for where else I can go. That went there already. Apple. Yeah, I forgot Apple. That's where we was talking. Let's go to Apple. I'm not a fan of Apple. However, I just want to go into the charts with people who love this thing. Apple is one, I believe it trades in, it trades in just measured moves. But let's open this chart up again. Alright, I don't want to go into the history of Apple. But Apple has been, for as long as I can know it, running measured moves. Extension shows a break. Let's get rid of this one, because I doubt we'll be seeing $67 Apple. Come on already. Alright. Got measured moves on Apple. The lows of 2013 to highs. Support has traded. Support has traded back in August. Pre-Labor Day. Targets up 153. And if I'm not mistaken, the short has broken. Come on. I don't know why it's doing this to me. Oh, because I moved the chart screen. I really don't like the way you have to interact with thinkorswim. From 134.54 to lows. Short has broken. And this was last week. So the short breaks. What now? Short breaks. You have two opportunities. Well, the app pulls back. Alright, waiting for thinkorswim to catch up. 105, major support. But in my opinion, knowing that the way Apple likes to run in measured moves, I believe this should show you here. Slightly well off what a front run that was. Very sloppy. Apple does like to run in measured moves. I would really take it off of these lows. These are September lows. Pretty much the end of September. Thinkorswim. Love it. So I'm going to get rid of this because we know the short has broken. $113 should be buyable. And if we start trading below 111, it's 105. Targets 122, then 125 on to 153. Yep. Spools are trading 2068, up 8. And we got Fed minutes. Trade them safe, fellas.